Morning, everybody. The folks that are actually on the panel. So any questions that you guys have, we'd like to direct them all to the chat. We have somebody actually handling all of the questions. We're going to start with our regular program, and then we're going to go ahead and add some other questions for the Q&A for those of you who'd like to stay. I'm still letting some people in, but I am going to go ahead and get started so we don't get too far off track on timing. But my name is Fritzi Ortiz, for those of you who don't know me, and I'm with Tycor Title. This is my first bigger event on Zoom, so I'm super excited. As we know, our world is different today, and we had to make a lot of adjustments. Thank you, Erin. We had to make a lot of adjustments, so bear with me if we have any technical difficulties, but so far so good. And let's get started. So good morning, good morning, good morning. Does everybody know that it's Earth Day today? If you didn't, make sure that you continue to do the little things that support our beautiful Earth. So recycling, turn off the lights, conserve energy, plant trees, all those good things to keep our beautiful Earth moving and shaking as we'd like it to go smoothly and cleanly. So don't forget that today while you're out and about, and forever. These are good habits to take on. I remember when I introduced recycling to my household as a kid, and my whole family does it still to this day. So it's kind of a nice change in our lives, and we want to continue to do that. So we're going to get started. I want to do a quick little introduction with our panel today. So a little history about the Real Estate Forum. We were before, it was the Real Estate Investor Forum. So Carl Bassett and myself, who've worked together for some time, had decided we wanted to go out and kind of be out there. There was a lot of iBuyers out there. We wanted to support the local market. He's a big investor in town, and we wanted to support the local market and kind of spread the word on investing. And for all the people who wanted to learn, Carl was kind enough to want to share his knowledge, which a lot of people pay a ton of money to learn the kind of things that he was actually teaching in our forum. Well, when we changed and now we're all virtual and doing things a little differently for a little bit of time here, we wanted to not stop the forum, but also make it relative to what's happening in today's society. We can't ignore what's happening, obviously. And although we don't want to, lay down and just let things pass, we need to be active. This is our business. We are professionals. We switched it up a little bit and invited a couple of other lovely professionals in the industry and experts, in my opinion, and probably most of the Valley's opinion, to join us. So we have Mr. Carl Bassett from Homevestors. Thank you, Carl. Mr. Aaron Taylor, the infamous, the real estate guy. Everybody knows who Aaron is. We have Mr. Dustin DeHart with Nova Home Loans sharing his lending knowledge with us, and also Mr. Steven Sinko, who is going to talk to us about hard money, which is probably going to be more relevant here in the future. So we got a nice panel here with lots and lots of experience, lots of knowledge that we're going to share with you today. So I'm going to get started with Mr. Carl Bassett. Our first question that we want to get some information on is, how does the market look for a local investor since the iBuyer stopped buying? I wanted to keep that relevant because that was initially what this forum was about. And you are a big investor in town, so the iBuyer is not buying. What does that look like to you? And what do we expect for the year 2020?
Okay, so
overall,
my company is Homevestors. We're the biggest buyer in the nation, and so it gives me access to a lot of data. I think one of the most that I'm seeing is that our sales nationwide, our sales for our company are actually up 15%. So in a pandemic, that's a little bit crazy. There's two articles, points I want to bring up. One, and you talk to iBuyers, the top 4 iBuyers that are out there are not buying. Some of them will survive, or I'm assuming majority of them will not survive. I don't think they're coming back even in all of 2020. Likely Zillow returns, but the others we'll see. Wait and see. So there's a couple of points there. One is that the Association of Realtors here in Las Vegas show our data. So March of last year. So each year in December, January, listings go down, then we spike, and we go back up in March. This is normal. And our absorption last March 2019 was 3.7 months inventory sitting out there versus what was buying. So absorption was about 0.7. Our absorption right now using the March 20 of this year, 2.7. So it's nothing to be scared of. Right now we actually have better numbers. We're down 18%, meaning, so what's the difference? The main difference is that the number of listings is dropping. Now this past week, on, let's see, it was April 18th, they did an article. There's an article on Reuters News ran it, but it's a Market Watch article, and it's titled Fannie Mae. We'll go ahead and post it on a lot of the social media accounts. I think each of us will post it. Fannie Mae posted this out, and in this article, it predicts that the reason that the prices won't fall, the reason, remember, this is not 08, 09, 2010. We're not about to go off a cliff. The reason prices are not going to tank like they did last time is that inventory is going to drop, not increase. And so according to Fannie Mae, they did research on it, and Fannie Mae believes that inventory in 2020 will actually go down by 15% throughout the year. And that makes all the difference. Now, if inventory spiked from about 9,600 homes up to 15,000 or 20,000 homes, we'd likely see some fairly significant price drops. But if we drop 10, 15%, we're not going to see those same price drops. And so they actually predict, Fannie Mae predicts by the end of the year will actually increase in value 2%. So now there'll be some deals, and there'll be some people that need to sell, and there'll be, it doesn't mean there can't be deals out there. If you're scouring the MLS for an investor or for a homeowner to buy on their own, they can still find some deals. But overall, we're just not gonna see big price increases. We'll see less new construction. We'll see less in the upper price range. So don't be surprised if prices come down a bit on the median, just because we're gonna have less new construction and we're gonna have less higher end houses, let's say 500,000 plus, are selling on the market. So we'll have more, $200,000, $300,000 homes selling on the market. So it'll seem like the median came down a little bit. The media will likely make a big deal out of that, but it really just to put it into the context that the lower price range is selling better than the upper price range, so that we should expect to see the median drop. However, dollar for dollar, for if my home is worth 300,000 today and is it going to be worth about 300? According to Fannie Mae, it's going to be worth about 306 at the end of the year. We're not going to see a big significant drop. So, and that seems to be the case. I think that it's going to end up being the case in Las Vegas, at least through 2020, 2021. We'll see, because at that point, the bank's potential, more short sales, more foreclosures will be on the market.
Okay. Does anybody else want to give an opinion on that? So what your outlook is for 2020, Mr. Taylor?
Yeah, so I'm kind of like on Carl's wave a little bit, but I probably disagree a little bit more. Even though I'm very optimistic about what we're going to see here at the end of the year and the beginning of next year. In my opinion, and I don't read, we do read some articles, me and Dustin, on our radio show, but I think the median price is going to probably drop by the end of the year to about 300,000. Our inventory over the last 2 or 3 weeks has went from 6,000 to almost 8,000. So it's went up 25%. And I think just the sheer message of inventory going up and what's going on in our valley right now, and because of the price drops that we're having, it's going to affect everything at large. But still, I'm very optimistic that in 2021 of spring, we're going to bounce right back. Even 8,000 homes, condos, and townhomes on the market isn't a lot. I mean, it just isn't. We needed the inventory anyways. But when people see more inventory coming on and they see the price drops and homes, that don't sell in like 2 weeks or 30 days, they're going to adjust their price, and it's going to reflect the medium, and it's going to reflect the inventory. And then I also think that, and I use this analogy a lot, MGM, for instance, let's say they have 5,000 employees, and we're going to have that, I think, a guest coming on, right, Carl, that's going to talk about the casino market. When MGM opens up, if they have 5,000 people, they're not going to hire all 5,000 people back. they're going to hire 2,000 and they're going to adjust it as the business increases. Well, a lot of those people own homes. And unlike 08, 9, and 10, people have equity in their homes and they're going to need money and they're going to sell their house and they're going to put them on the market. I'm already seeing it now because I'm still listing darn near a home a day. And I'm having these casino workers and people that are on unemployment listing their homes. So the inventory, in my belief, is going to hit about 10,000 by the end of the year. And because we're going to have this inventory, and yes, we're going to have some buyers too, even though buyers went from 100 and something a day now to 50 or below, we're still going to have buyers, but it's going to adjust the value. People are going to take less for their house. Just like I bought a house last week, we closed on it. I'm closing on one Friday for our flip business. And these people are taking 10% less, and I'm paying 10% less than I would have just a month ago. So I'm going to see, I'm definitely going to see a drop. In my opinion, it's going to be 10%, but I'm very optimistic, and we'll talk about that later. But that's, my opinion.
Okay, so I think you guys probably got through our first two questions there. So, Aaron, I'm going to stay with you if you don't mind. What are agents doing to not only survive and thrive while being conscientious of the times, but also finding creative ways to generate deals and leads and sellers and buyers? So, you said you're taking about one listing a day. What are you doing? And we know you were big out there anyway, but have you changed much about what you're doing? And what would you suggest to our folks who are here today who need some, ideas?
Yeah, so yesterday I had a Zoom meeting. Our Tuesday training at 10:30 is still every Tuesday at 10:30. We just do it Zoom now. And yesterday we talked about out hustling everybody. So you have to, like, I'm working harder now than I ever did before. I get up earlier, I make more phone calls, and I just work harder. So you have to out hustle. You can't get, caught up in the hype of, staying home doesn't mean don't work. That means staying home. You have a phone, you have a computer, you have social media, you have all these resources at your fingertips that are there for you. But if you're going to put yourself above all the other 15,000 agents, and I know a lot of you guys know this, but there's going to be a couple, 2,000 or 3,000 that go away by the end of the year. If you're going to compete against guys like me, you have to out hustle me. So that means you have to have a good work ethic. And then you have to change what your message is and what your business is. And you have to be very political about it. So I often talk about right now, COVID-19 is like one of the top 3 things that you want to be very delicate about when you talk to people. There's politics, there's religion, and now there's COVID-19. And you better be kind of in the middle, because you're going to have one person that wears the mask in the car and the gloves and doesn't look at people because they're afraid of getting a virus. And then you have the other person that wears nothing, that hugs and kisses still and thinks it's all a hoax. But as salespeople and real estate agents, we really have to be in the middle of what we're doing. So we're changing our message. Like, I'm doing more TV commercials than I ever did before, more social media, but I'm really utilizing our Matterport 3D virtual tour. Even though we've done it for 3 years, I'm bringing that to the surface. We're talking about keeping Las Vegas safe and Henderson safe. But we're really not doing, the mass thing, and we're not going to one side or the other. So agents out there, you got to get up earlier, you got to work harder, you got to be creative, use social media as a platform, because everybody's at home right now on this little phone right here. Everybody and their mothers could probably pick it up right now, and instead of my team making 5 phone calls a day with a message, we're making like 20 calls a day. Because we want to make sure when this city opens up, which it will, this is going to pass. When it opens up, they hear the real estate guy on my team. You guys want them to hear the same thing when we turn this thing around.
Fantastic. So clearly then you didn't stop marketing. You went in deeper into your marketing. It sounds like you're working harder, you're hustling more, and you have a radio show. Is it on Sundays? Is that correct?
No, so our radio show is called Real Estate Live on 840 AM News Talk Radio. It's
okay.
On Saturday from 10 to 12.
Perfect.
And we've been doing it for several years. And I do it with a gentleman named Dustin. He's the Senior Vice President of Nova Home Loans. He's an incredible lender. The guy's very knowledgeable. Not the best looking guy in the world, but he's really good at what he does. And that's why we're on the radio. But, you know, a good segue into showing our boy Dustin right now. Dustin DeHart with Nova Home Loans.
Fantastic. Thank you. Thank you. That's exactly where we're headed, Dustin. We need your expertise in this too. So, so good to hear the radio show is going strong. I'll be listening on Saturday. I've been off my game here. So, Dustin, we definitely have some lending questions. So, the mortgage industry after coronavirus, this is like our new norm, right? Before coronavirus, after coronavirus. So, can you address a little bit about what's happening in the lending industry and what your outlook is? Like, is it doom and gloom, or we just adjust? That's the way I like to think about it, right? Where nothing's doom and gloom unless that you're a doom and gloom person. We really have to adjust to the times because they're changing, and you either change with them or you don't, right? Give us a little insight into the lending aspect of it.
Yeah, absolutely. So it's been a roller coaster and we're still on it. Right when this started, the first domino to really fall was non-QM loans. Those are the bank statement, one day out of foreclosure stuff backed by Wall Street. Wall Street's got its own issues. You know, not the end of the world if we lose those loans. They'll come back. You know, right now, jumbo loans, anything non-conforming over that limit are on somewhat life support, in my opinion. You know, I normally have 12 different investors to choose from in the jumbo arena. I'm down to 2. One of them being Chase. And if you haven't seen the article recently from Chase, they've actually installed an overlay where they won't originate anything without a 700 credit score or 20% down. So I would imagine Chase might jump out of the jumbo arena soon. But right now, there are still options for jumbo borrowers. Down payment assistance is still around. They're starting to put in their own overlays as well. E-housing, which is home as possible. And they're becoming, they're a little more difficult to deal with nowadays. I mean, but again, it is what it is, but they are still around. You know, some lenders don't have any jumbo options or down payment assistance. You know, my company does. I'm not here to go which ones do and which ones don't, but even, you know, look at like Quicken Home Loans, they won't lock a rate until you're clear to close now. So there's a lot of changes happening. And, you know, it comes down to that, you know, that phrase, no good deed goes unpunished. And it's because of the forbearance programs that have been installed, you know, and, you know, when the federal government steps into the mortgage industry for good or bad, there's always unintended consequences. And that's what we're seeing right now. So the main issue, you guys, is the servicing platform, right? So if you're a loan servicer, you know, you have to pay those payment streams to the investor, whether you receive them or not, right? So that becomes an issue. Now, look, in normal life, they have enough reserves to cover the missed payments and get through, you know, whatever they have to. But when, you know, there's speculation where 10 or 20% of all home loans may go into some forbearance plan, that's a big issue. And no servicer in the country has the pockets to deal with that. So it's weird. It's very fluid. You know, a few weeks ago, Ginnie Mae was the big problem. You know, that's FHA and VA. You know, a lot of lenders stopped even lending with FHA and VA. I think most are back, but a lot have different overlays. We installed one, just 640 credit score for an FHA loan, not the end of the world. But HUD actually stepped in. They have a pass-through program, so they're helping out through this. So now kind of the question is what's going to happen with conventional loans and FHFA. Mark Calabria is the director there. He's had this stance of, you know what, the servicers can deal with it. And it's been a very, very callous stance, in my opinion. Yesterday, he actually, you know, they did give a little bit of relief. They kind of put a Band-Aid on it, more or less. And, you know, what they're saying is they'll insulate after 4 months, then they'll take over. But again, guys, if there's that many home loans that go into forbearance and those servicers have to continue to make those payments, 4 months is way too long. So again, it's the mortgage industry. You know, it's funny how the last recession, the mortgage industry was the catalyst for that. And now we really could help get us out of this, right? So I know the federal government's going to step in. The mortgage industry won't collapse. I'm sure the Federal Reserve will do some type of lending program for their servicers to get through. And again, it's fluid, it changes daily. But, it's dried up, the aggregators that we can sell to. We can still sell to Fannie and Freddie, but it's limited amount of pools that mortgage lenders can sell to. And that's what's, drying up the liquidity right now. But again, it's not the end of the world. We'll get through it. It's going to get fixed, in my opinion, but there are some issues that we have to deal with. And another issue is the furloughs, right? There's all these borrowers that are, they've started the process with us. And at the end, a lender has to do what's called a verification of employment, right? Make sure they're still working. Now, the problem is a lot of them, like let's say the Wynn, for instance, great company, they're still paying their employees, but Fannie doesn't treat that as you're actually working. So if they're on furlough, they can fund their loan until they're back to work. So that's another big issue that we're dealing with. So those are the two main issues that we're trying to work out. Now, again, when the economy opens up and Vegas opens back up and people are back on their job, that'll work itself out. And then again, the servicing issue should work itself out, but it is a pressing issue right now.
So, right now, overall, we need a lot of patience because there's a lot of changes. And it sounds like just as a buyer with a loan, without a loan, just doing any transaction right now, we need a lot of patience. Things are changing every moment, it sounds like, right, on your end, Dustin, with lending. And so I'm sure that's difficult passing that on to your customers as well as things are changing. Today you have a loan, tomorrow you may not. But so in situations like that, staying on the lending subject, I'm going to turn to Mr. Sinko when there may be a need for someone who was qualifying before. Maybe they're not in a prime situation to do a conventional loan, but they may need hard money. So Mr. Sinko, on the hard money end, what's changed on your outlook and what you're seeing with your investors on the hard money end? So sometimes people would come to you with more difficult financial situations. How are you seeing the changes today? I'm sure it's changing every day as well, but what's the outlook on your end?
So first and foremost, I just want to say thank you for inviting me to be on this panel.
Thanks for being here.
We're private money lenders. We're private investors. We deal with investors only. We're not into the owner-occupied single-family home ownership. We're fix and flippers. That's why we work with Carl. We love Tycor. God, I know Dustin going way back, right, Dustin? Helped my wife get a loan way back when. And actually, Aaron and I used to work together back when short sale business was a big thing.
Nice.
Lending. We've been through it. We've been through it all. My private investors, myself, been around it for a long time. I think that right now we're in the middle of it. We're in the middle of everything that's going on. We don't just get to originate loans. We don't just get to fix and flip properties. We service those loans. We service those properties all the way through to when they get sold. So, I sit here and I have the directive right here from Governor Sisolak. We monitor it. We care about our borrowers. We want to make sure that everyone's successful, but then we also care about our investors. So we're right in the middle of the whole thing. As far as loaning money or what we're doing, we're still closing deals. We're still looking at transactions. I've got commercial buildings that I'm working on right now. I've got a couple flips I'm working on right now. I actually just got done closing one, I don't know like a week and a half ago. So rates, they're still double digit. Private investors that are willing to put their money into this market and trust a borrower, they still want a double-digit rate of return. As far as terms, we're still looking at short-term money. Most of my deals are in and out in less than 6 months. As far as this directive, it's only 22 days old. And so we're ready to weather the storm. Anything that we're looking at today, it's not going to have a payment for another 45 days. So, we believe in the market. We believe in Las Vegas. We're not going away, and we're here just to field your questions. Like I said, I got this directive, so if you guys want to review it, if you want me to email it to you, just send me an email at fifthbridge@gmail.com. I'll send it over to you. But otherwise, I'm kind of ancillary to all the people on the screen, and happy to help.
Thank you. Thank you very much. We appreciate it. So we have some questions that are in our group chat over here. So Mr. Jeff Belknap has been monitoring that a little bit. This is coming close to the end of our formal session, and we were going to go into a Q&A if anybody has any questions that they want to ask. We are requesting that you put it in the chat if possible. So we also have put in some slides with everybody's contact information and their social media links, so you can follow all of us. We're all trying to stay abreast of what's going on clearly and keep you guys, knowledgeable in the process. So I am going to turn it over to Jeff for the first question. Jeff, if you don't mind, if you can you announce the question out loud that you're going to be we're going to be addressing here? And then, guys, we're going to switch it off between each of you so that we don't all talk on top of each other. So if we could direct the question to one or two panelists, that would be fantastic. Jeff?
Okay, so the one question we had was actually for Aaron, and it said, with some of the message changes and the implementation, would you consider more important to be middle of the road on the political aspect? I'm sure that's for the real estate agents.
I think I saw Eric.
So I guess the question is to be more of the middle of the road with COVID-19 and my opinion. So when we make phone calls, when my agents that work on my team and when I make my phone calls, I have a saying that it's always business first and then personal second. So we would always call somebody, hey, Carl, how you doing? This is Aaron Taylor. If you were ever to buy or sell a house, I had a friend or family member that was, am I still the agent you would use Uber for business to? Yes. All right, man. Thank you. By the way, how's the family? How's Carl? How's, then you go that way. But now we've changed it up to where, because of what's going on in our city, whether you believe it to be true or not, doesn't matter, it's there, is we're starting personal and then going to business. So the conversation is more of, hey, Carl, how's work going? What are you doing? How are you getting through this? How is it affecting your family? More of a caring phone call. And is there anything that I could do to help you out? Do you have any questions about the real estate market? Do you think that, what do you think is going to happen with the equity of your home? And just kind of be there for that person as almost like a psychiatrist, a doctor, because they're uncertain and they're unknown. Everything's unknown what's going to happen. And you need to be that voice of reason when you talk to people. And it's very important to keep it positive. I mean, you got to keep it positive. You can't, the cup's always half full, in my opinion. So there's always a way to put a positive spin on it. So I would always stay neutral, always be positive. And in this case, start your phone calls more personal than business.
Perfect. If I may too, if I could interject, I left out my title piece. What is going on? But I do want to, while we're here, let you guys know what we're doing. On our end, like you said, Aaron, we're being very conscientious of what we're still closing deals every day. Our offices are still open. We have most of the staff working from home, but we're very conscientious about what the consumer wants. So ideally, we're encouraging all the signings take place at the consumer's home so that they opt in for a signer to come in and do the signings. But we do have options for folks who don't want to do that, and we're offering curbside signings. So now if you walk down, we're prepared either way, but if you walk down and the person's covered head to toe, then you probably want to be sure you have a mask on or you have some gloves on and you're practicing your social distancing to an extreme so that you're not offending the person that you walk up to. We do have to be personal first because there is a lot going on and you don't know what's happening. And this is a general life rule, as we know. You don't know what's happening in anybody's life at any time. So a lot of people have a brave face and maybe panicking underneath. So we've taken tons of measures to make sure on our end that we're providing good service when we see your customers and that they're comfortable with us, basically. But on a title insurance end as well, our underwriting guidelines, we opted in to go in and support. Like, we didn't know if the state wasn't going to do recordings, or if they were, and as a company, they decided that they were going to support recordings, which was, you know, a really great moment for me as an employee of this organization, because even though you may not record today, and you know, we don't know what the future holds, but we were going to continue the coverage through that gap, basically, until it recorded. And so that was I was proud of the way that our company handled that. And things change every day. So, you know, that may not be the case in a week if something goes worse, but I feel like according to the governor's speech last night, it looks like things, you know, we're being smart about the way we're going back into it. And I foresee a positive change soon, but we do have a lot of people out of work. So Jeff, do we have any more questions?
There was one question from Ryan. With the iBuyers on pause, are RITs still available or active?
So Carl, do you want to take that one, or?
Yeah, with iBuyers on pause, I didn't hear the last part of the question, it broke up, sorry.
Are RITs still active?
RITs?
REIT.
The real estate.
Oh,
real estate investment.
Got it. A REIT. Sorry. So yeah, somewhat. I think it's hit and miss. I know that there's still buyers in town. At the end of the day, I can only really speak for me. I'm not a realtor. So it means that if you're a realtor, you have a cash offer on the property, if you contact us directly, you can represent us and the seller. If you're okay with that, if not, we'll find another agent to represent us. But in other words, we would give you cash offers. So if you brought us a deal and said, hey, so-and-so's interested in cash offer, I don't need to talk to them directly. I can look at it online. If it's occupied, we don't have to do an inspection. We'll make it pending inspection later. And I can say, here's our cash number. Does it work? And then you go present their client and see what they want to do. So on any property, you can say, hey, would you like to write an offer on this? And we'll write an offer. And so you can represent us on any of them. And that's a way, if you want a cash offer, you want to move the transaction, we'll find some deals to write offers on, write as many as you want.
Well, I think one of the things that kind of prepared us for this was that the consumer, we saw the iBuyer just hugely take off in our market, and the consumer didn't really want to sell traditionally all the time. They kind of they didn't want to do open houses. They didn't want people in their houses all the time. So I feel like that may have led us into this in a more positive level. If it was only selling these days, but without all the virtual stuff that we have, we would be in a worse situation, in my opinion. So I feel like the fact that a lot of people kind of wanted to customize the way that they sold their home helped in a situation like this where you can't be in somebody's home. So somebody like an investor who is more willing to buy sight unseen is actually a really good thing in this market.
Can I add one thing to that? Fritzi? I think there's going to be a lot of people, because of furloughs, that don't get hired, that may just not want to move, but they need to take that equity out, but their kids are in the right school, or they love that home, it's remodeled, whatever it is. I can buy the house and then rent it back to them. So they get their equity out.
Oh, that's great.
So we can do that. If you're an agent, you bring that deal to us, of course, you're representing. But we'd be happy to buy it and then rent it to them. Honestly, if you're looking for those options, you give people that option, you find that a lot of people, it's an option some will want going forward.
Well, that's a fantastic option. Aaron, what's your thought on that? On, having an investor, would you present that to somebody where they may want to still stay in the home, but they'll sell it and rent it back?
Yeah, we do the same thing. When we purchase homes, we allow the seller to stay into the property. We usually do it for free in about 2 weeks longer than Carl does it. And no, I'm just kidding. No, we have the same program. If they need to stay in for a few months, we'll rent it to them. And usually, like Carl, I'm sure he does the same thing. It's all about the price that we get the property for as well. But yeah, like I said, I think that as Carl's probably looking at the market, instead of buying the house, let's say 20% below value or 25, I'm going to have to get it at 30 now. Just because, like you, Carl, mentioned earlier, you know, I kind of disagreed with you a little bit. You think the median price is going to stay pretty much level or go up from your articles that you read. And I think it's going to go down. So when I look at houses, if that value is 300 and I'm trying to get it usually before at 230 or 240, you know, I'm getting it at 220 now. That's just my mindset because I really think it's going to go down. But I'm very glad that it's me and Carl and Ryan and Sean and a few guys just buying homes now, and that Zillow and OfferPad and Open Door aren't buying any houses. I mean, it tickles me pink, doesn't it, you, Carl?
It's true. It's true. It's less competition, but I also do believe that there's great deals to be had. And so obviously I want to be in it. It's why I'm buying. I just believe that the Fannie Mae article has merit in that if supply drops, we're not going to see a huge dramatic, we're not going off an 09 cliff. Remember 09 where we fell off the cliff and we were like, what just happened to us?
Oh, for sure not that. Yeah.
That's not going to happen. So I want people to not have learned anxiety and say, oh, we're on the same roller coaster. I've been on this one before. It's different. It's totally different. And so I believe that, yes, prices will soften. I do think the median's going to itch down because we don't have the higher price sales. I'm saying don't read into it 100% that my home dropped. If your home isn't in that price range, it likely didn't drop to that same level. It'll just soften a little bit. But you know, at the end of the day, I think my biggest thing to tell realtors is, and I think you guys have heard this a bunch, but it's the Warren Buffett comment. And he mentioned this, it's been a couple years ago, but he basically said, this is how does the Oracle of Omaha think of things? And he said, we simply attempt to be fearful when others are greedy and to be greedy when others are fearful. That's from Warren Buffett. At the end of the day, so many people are paralyzed on the sideline. I can't do this. I can't go land the deal. I better just wait. It's the exact opposite of what you need to do. Now you need to be greedy. You need to double up your action and buy more deals or go get more clients and just push. Because I think right now is a huge opportunity, massive opportunity.
Yeah, and you're right. If that's why, like yourself, Carl, and myself, I'm not making, you know, X calls. I'm making Z calls now. I'm making double what I used to do before. And for you agents that are listening, you need to work harder and outpace the rest of the agents. And there's a huge opportunity for you because I promise you, same with the lenders, you know this, half of the lenders and half of the real estate agents are sitting on their butts, watching Netflix, eating popcorn. Oh's me, I can't believe this is happening. The world's going to end. I'm not going to. They're using the excuse of being social distant, of not working. They just needed an excuse not to work. Well, take that as an opportunity because you could still work, practice social difference, be COVID-19 compliant. You could do all those things, but out hustle the competition. Let's go. Let's do this. There's money out there. There's opportunity.
And you need a title company who's going to be around to close it for you. So
The most resourceful people in the world, Ty-Cord Title.
Woo!
Yes.
Oh, well, this has been an absolute pleasure. I'm really so thankful that you guys jumped in on this with me. So thank you very much, Carl. We're going to continue these. We're going to do them once a week now is the plan. So, and we're going to try and have exciting speakers. Hopefully Aaron and Dustin will come back with us as well, and Mr. Steven Sinko. Does anybody have any additional questions that we want to address real quick before we maybe close up this morning? Well, I don't see anything else in the, so I hope you found, I'm sorry?
I got one other thing. Look at interest rates. You know, we're in an environment for really low interest rates, guys. So when this all, you know, gets itself resolved or people are back to work, you know, we're going to get a lot of buyers, a lot of pent up demand. So you got to be ready for it. And we're going to have record low rates again. So you just got to weather the storm, like Aaron's saying, and we're going to be back full speed, you know, so it's going to be awesome. So.
And on that note, Dustin, that's something that I think while folks are at home and something you should share with your customers and the buyers and sellers out there, like to be ready, because yes, we're in this position right now, but be ready. Something that I found interesting was with a lot of these businesses that are getting money from the government, most of the folks that like were over prepared and had all their ducks in a row and were able to just submit things like quickly. I've got a lot of customers that have already gotten funds and gotten approved, I should say, and moving forward. But if there's some folks that, like, not everybody's ready. If you're a small business and you're just trying to keep your business afloat, you may not have all your paperwork and everything ready. And in situations like this where money disappears quickly when a lot of people need it, and you're not ready to like submit, for example, I think it's important as a consumer, not just a business, to be ready. So when this eases up a little bit, people are back in their jobs, you need to be ready. You need to have all your paperwork ready so you can submit it to somebody like Dustin, or have your customer submit it to somebody like Dustin, and we can get it going and get people locked in, contracts signed. So be prepared. Like, some of this time you're hustling to get work, but also be prepared and prepare your customer to be ready to do whatever the next move is for them. So anyway, I think it's a wrap at this point. Again, thank you to my lovely panelists. Thank you, Carl Bassett. Thank you, Dustin DeHart. Thank you, Aaron Taylor. And thank you, Stephen Sinko. Thank you, Jeff, for keeping the chat alive and answering everybody's questions. And everybody's contact information was in the chat, but if you need it, I will definitely send out an email to everybody so you're able to contact. And if you have any additional questions, we're going to make sure that we address those as well. You all have a beautiful day. Stay safe, stay distant until we're set free, and wash your hands. Wash your hands, and it's Earth Day, so do something good for the earth today. Thanks, guys.
Bye, everybody.
Bye.